Hello everyone, welcome to this video where we are going to discuss about our monthly outlook for April 2024. I am Nupur Shah, Wealth Manager at Wealtrust Capital Services. For the brief, Wealtrust Capital Services is a full-service boutique wealth management firm in Mumbai. Today, we have two panelists here. Sneha Jain, who is the founder and CEO of Wealtrust Capital Services, and Shubham Jha, who is the Senior Research Analyst at Wealtrust Capital Services. Sneha, over to you.
Thank you, Nupur, for the lovely introduction. So yes, the last few months have been quite different from an allocation perspective as well. We've seen gold, being an asset class that we would like to look at going forward. And we can say that it's the golden era where again central banks are buying. And why is it making a comeback? What is this buzz about? We'll just discuss a little bit in detail. So if you look at the last 3-month performance, gold has increased almost by 15%. From an asset class perspective, this is actually a best performing asset, at least in 2024. Silver also has actually performed impressively, so it's yielding about 13%. Why is that happening? On the back of central banks, including China, they are increasing their gold reserves. Why so? To hedge against global uncertainties. I mean, there are yet with the US rates being on the higher side and expectations where the US will cut down rates, also has contributed to the surge in gold prices. Also, there are geopolitical events, Israel, Iran yet ongoing, Russia, Ukraine also yet ongoing. So this has further boosted gold prices, because we see during such times gold kind of benefits because of uncertainties. Given the overall global backdrop, we yet feel that gold has, though it has gone up so much, we yet feel gold, and even from a consensus standpoint, gold may be one of the better performing asset classes going for the next 1 year at least. So the consensus also says about 17% growth, gold growth is expected, and we'll be able to see that only next year. But we do believe that this gives some kind of a leeway to add an extra gold allocation to your overall portfolio building. In terms of equities, we are looking at a few sectors where we feel there can be, going forward, maybe not today. Manufacturing is definitely something where we are seeing a lot of things happening, and we believe that manufacturing, especially given the Indian story in terms of equity, could be a sector to look out for. I will, tell Shubham to add a little more on the corporate earnings and how we're looking at manufacturing as a sector. And it may be something we want to start looking at in terms of allocation, but allocate a few months later or down the line. But definitely it's something that now our eyes are on. So Shubham, you want to add a little bit?
Yes. Yeah, thank you, Sneha, for the amazing explanation about the gold. See, I think that Indian manufacturing has a huge upside in coming years. If you will see, right, government has some initiatives like Atmanirbhar Bharat, then Make in India. This all initiatives will help Indian grow and eventually will boost the domestic productions. Government has already came up with some PLI schemes, and recently, experts are expecting that there could be a PLI 2.0 scheme, which will eventually help the exports grow. So, if you will see from the last 2 3 years, there were some sectors like textiles and electronics and telecom which were not eventually helping the export demand grow in our India. But if you will see last two datas of exports, they have been increasing heavily because of the sectors like pharmas or telecom or electronics. So I think that yeah, the corporate earnings are also eventually going up quarter on quarter, and we think that this will will be continuing for the next 2 to 3 years.
A quick intro on the banking sector. So this is one sector, if someone had to ask me today, wherein equities is definitely a sector that is relatively compared to the other sectors, is definitely something which looks more from a valuation perspective, from, all the ticks right for this one. Definitely it's a sector to watch out for. At least in the next 1 year, we could see pressures on other sectors which have been overrun. At least when it comes to a sector allocation, we do look at banking as a crucial, BFSI as a crucial allocation, which could be added as a part of your portfolio. I will also tell Shubham to, deep dive a little bit on the sector and why so.
See, Sneha, you are right. I mean, from the sector point of view, I also think that the banking sector is a good valuation bet with attractive valuation. We think that banking as a sector can outperform other sectors in a longer period of time. Recently, RBI have came up with some restrictions for PSU companies, and they are being stricter more to the NBFCs and banking industries. But eventually, it is good for a GDP perspective and from a nationwide perspective, which will eventually help private banks and as well as PSU banks to reduce their NPAs. So I think that banking sector as a whole sector is a good bet to invest.
Now, one strategy where we feel, is a good point to look at, especially given today's environment where equities have performed extremely well for the last 2, 3 years. We have seen valuations at highest levels at the moment. The market has gone from highs to another high. So when the market has given such exceptional returns, of course, we expect some kind of sideways, or some kind of not we cannot make the base from like how the returns have been earlier. So we just feel that moving to a few other asset classes, or just rebalancing your portfolio a bit towards other asset classes, may be better off for this year. And we will like to present this pack that we have, inflation resistant. Go on the last slide. We'll just explain a little bit on, no. Go on the inflation resistance side. Yeah. Shubham will now deep dive a little bit onto, what this is and how do we kind of allocate for this.
Yes. So basically, as we discussed, right, that the last monthly outlook also, we were very confident that there could be huge volatility. And if you saw this month that the VIX was at their all-time high. So we are expecting the same for the next 3 to 4 months. Until and unless you get an election resume, you will see a lot of volatility. There's some volatility in geopolitical. Geopolitical thing, and then golds are hitting at their all-time high. So people are still confused, should they invest in the gold or equity part. So we have introduced this small case 2 years back, where we invest 50% of our assets in debt and gold, and the rest 50% in equity. So eventually, if you will see, right, we have beaten the Nifty 50. We have beaten the multi cap Nifty 500 also with a good margin. So basically, what we do, we invest 50%. We don't shift our 50%, or we don't change it to 60 to 70% of equity exposure. We are very strict with this sector. We invest 50% in gold and debt. The next 50% we change it from large cap to mid cap to small cap. So this will eventually help you whenever the markets, you will see the whenever there's a correction, or any geopolitical issue, our inflation resistance won't get a big hit. And you can see a chart from from the max perspective or 6 months perspective whenever there is an issue, right? Recently, Iran Israel thing happened, right? But our small case was up by 2 and 3%, and if you will see, right, the small cap index fell to 14%. So the reason we created this small case was because whenever there would be an issue regarding geopolitical issue, or inflation picking up to their all time high, this small case will help you to balance your portfolio and eventually will grow it.
So this is a pack that we have, the inflation-resistant pack. It's meant to actively move between asset classes, taking gold and debt at least of 50% and only 50% exposure to equity. We believe that it's very well placed today, given the current macroeconomics and the current equity outlook given for the next year. We believe this can be a very interesting pack to look at. It's available on platforms like PickRight and Smallcase, and it has a 2-year performance history as well. Just concluding with, just quick remarks on what we discussed. Of course, in terms of your overall portfolio, it has to be goal oriented, and keeping a long-term approach kind of helps. Rebalancing is not needed for your longer term goals. It's more meant for your shorter term goals. So volatility, of course, will continue in equities, but doesn't mean you just rebalance, if the goal is meant for 5-7 years later. We are definitely overweight banking and some beaten down sectors. We are going to look at manufacturing, with definitely with a lens in the coming future. But given currently we are a little more overweight on the banking and the energy sectors, and of course we recommend adding gold and debt allocations at least for the next 1 year view. Though of course on the debt side also we may see some hiccups until the interest rates do not come down, but we're very positive on it for the next 1-2 years. And of course, inflation resistant, which is available on our PickRight and Smallcase, is a good alternative strategy in the volatile markets. Anything, Shubham, from you to end with?
No, that's it.
Thank you so much.
Thank you, Sneha. Thank you, Shubham, for your insights. Thank you.